that will go in the opposite direction of the S&P 500, well, then we have SH. Hey, what's up, fam? My name is Brehon. I'd like to welcome you guys back to the channel where we love focusing on our own personal and financial development. Hey, family, one of the questions that's been brought up every single day: are we in a recession? Is the market declining? Well, oftentimes you have a lot of people out there talking and voicing what they believe is a recession, what's not a recession. But what we like to do over here is we like to let the charts speak for themselves. Now, when it comes to data, right, and these charts, it's a cycle. It's history that repeats itself over and over again. So let's take a look at the S&P 500, which tracks and owns the top 500 companies in the U.S. Let's take a look at what the S&P has to show for us. Now, going back to the early 90s, all the way up into 2000, we had a tremendous run up. Then at 2000, we hit our high of S&P, $141. Then from 2000 to 2003, we had 29 weeks consecutive below this line here. And what is this line? This line is the 20 SMA, simple moving average. Now, the simple moving average tracks and averages the 20 previous trading sessions. And the 20 SMA has been golden when it comes to trends, right? Because nothing moves too far away from the 20 SMA. Nothing moves too far above. Nothing moves too far below, right? And so it is a gauge for understanding the movement of the market. Now, there's a lot of indicators out there, hundreds of indicators, but the 20 SMA has been golden, and we can let the 20 SMA speak for itself. So we had a huge run up, and then we fell below that 20 SMA in November 2000, and we stayed below the 20 SMA for 29 months. Right. And so this chart here is the monthly candle. And I love the monthly chart because it gives you a broader perspective of how the overall market on a larger scale is going to potentially move in the future. And so we had a nice crossover coming down in November 2000, and we had 29 consecutive months below the 20 SMA. We came across the 20 SMA, right? And now we had a nice run up, beautiful run up all the way to 2007. And we all know about this. The housing crisis had to bail out automotive companies, had to bail out a lot of banks, and a lot of financial companies closed shop. They pretty much were shut down. All right. And so again, 2007, what do we have? We had 22 consecutive months below the 20 SMA, right? We went below the 20 SMA in January 2008. Remember, this is a monthly chart. And we had 22 consecutive months, right? So we went above that 20 SMA and we stayed there. And so oftentimes, when you're looking to trade and you're looking to make long-term investments, when you can take a look at the 20 SMA on a monthly scale, it gives you an average of the price action over the period of a month. And so that gives you a good indication of the potential direction of the stock or the ETF or the index fund. And so we crossed over in 2009 and we had a nice run up, right? And now we had a slight pullback in January 2020, which is considered like a correction. So a correction is you have a few months in the market where the market declines. And so now we had this small correction. We went back above that 20 and we rolled this thing up. So what do we see now? What do you think could happen? Well, based on the monthly chart, based on the monthly chart, we have now fell below the month of May, the 20 SMA. Now, when history repeats itself, right, what do we have? Back here, we look at, when we look here, back in 2007, we had a couple of consecutive months in the red, and we had a slight pushback to the 20. It was met with some resistance and continued its downward movement. So now we've had one month where we were below the 20 SMA. Now we have in the second consecutive month in the red. We are developing a candle for the month of June. Not a good sign. Not a good sign. And so I have a support level here. And what could possibly happen based on the law of averages, right? Based on history, how history repeats itself. A lot of experts are predicting that 2023 could see, a huge decline in the price. And so when we take a look at support and resistance, right, we can actually see the potential of the S&P 500 coming back down to 240, where it hit 240 in April of 2020, where it hit 220 in 2019. And so this is potential of just a small retracement back to 240. It's very, very possible, right? When we take a look at the MACD on a monthly scale, we have a lot of momentum moving out of the S&P 500, right? All right, now let's take a look at weekly charts. Take a better look, right? And so now let's take a look at the weekly charts. Again, we had November 2020, November 29th, we hit our high here. We cross over to 20 SMA on the weekly chart. We've been hitting, we come back to the 20, hit with some resistance and continue our downward movement. And so this may be the trend going forward. We may retest the 20 and fall right back down. Retest the 20 and fall right back down. And so we look at that, we can see that in this pattern, we can continue trailing and falling down all the way down to May of 2023 if we keep up with this pattern. So family, the potential of continued downward movement is possible. Now, what are you going to do? What are you going to do? All right, what are you going to do? Man, what we're going to do is we're going to keep buying. We're going to keep buying stocks, right? Because this is the time when you want to continue buying. You want to keep buying these stocks, ETFs, index funds, great stocks, great ETFs, great index funds that has the potential to yield excellent returns in the future, right? So we want to continue buying when these the price is falling, cost dollar averaging, and we're going to continue adding to our bag. Now, if you want to make some money, right? If you want to make some money along the way, and you want to invest in a play that will go in the opposite direction of the S&P 500, well then we have SH. Now SH is a fund that shorts the S&P 500, right? So this is the weekly chart of the ProShares short S&P 500. So we take a look at let's go back to the monthly candle. Right? So as we can see, right, again, the market has been doing great. So if the market is doing great, the ProShares short is going to go in the opposite direction. So if the market is going up, the ProShares short is going to go down, right? And so last month, well, let's go. The month of May, we had a pretty much a flat, even month, right? And so when we take a look here at the monthly candle, it was pretty much flat also. So if the month is going to be flat, so when I say flat, it's pretty much this doji candle represents indices in the market. The bears didn't win, the bulls didn't win. They were at a standstill when it comes to its trading, right? But the month of June, we are developing strong bearish candle. The short, the month of June, we are developing a bullish candle in SH. And again, SH is only $15 a share right now, right? So 15.62. So as let's take a look at the daily chart, all right? So we take a look at the daily chart, we can see nice movement to the upside, all right? We take a look at the daily chart here, all right? Nice movement to the downside. So S&P 500 is going to give us nice movement to the downside. SH is giving us upward movement to the upside. And so again, hey, we want to keep buying our shares, keep investing long term. But in the short term, if you're looking for a quick pop, you're looking to make some money while the market is going down, remember, you could invest in SH and we can continue riding this thing up. It's only 15.66 right now. Great opportunity to, throw a few shares in SH and let's try to ride this thing up. So even though we're investing in the long term in our retirement accounts and our investment accounts, hey, you want to do some swing trades? We can invest in SH and we can do the opposite of the S&P 500 and we can continue making some money on the way up. All right, Pro Share Short, ticker symbol SH. Now, family, this is all I have for you guys today. I wanted to keep it short. Hey, if you like the information, hit the like, subscribe, and keep coming back for more wealth building information. Peace.